안녕하세요. Thank you so much for the kind introduction. Clement, 양 팀장님's 영어 이름 is Clement, for those that don't know. So I'm very excited to be here today. We'll spend the next 30 minutes discussing global venture capital trends. I think I did the quick math, and there's roughly like 45 years of combined investment experience on this panel, spanning from London and New York, where Richard's based, Silicon Valley, where Dongsu's based. So we should be very excited to hear about all those insights and what you're seeing in the marketplace today across the world. So with that, why don't I start quickly with some self-introductions, if you don't mind. Richard, if you don't mind self-introducing yourself.
Hey everyone, my name is Richard Kim. I'm a general partner at Galaxy Interactive. We're an early stage venture fund focused on gaming from both content standpoint as well as the technology relating to interactive entertainment. So we're investing our third fund right now and have invested in over 120 early stage startups and very excited to be here with you all.
Thank you. Dongsu?
Hello, my name is Dongsu Kim. I'm the CEO of LG Technology Ventures. It's an LG Group level CVC. We're based in Silicon Valley, and we were founded in May of 2018. So a little bit more over 5 years now. And currently, we're managing about $680 million in terms of fund commitment, and we are raising another $100 million this month, hopefully. So knock on wood.
Great. Congratulations. So just to kick off here very quickly, obviously everyone knows that the venture capital market has slowed down a bit over the past few years, as well as with the overall economy. But Q2 2023 global VC dropped to about $60 billion, the lowest amount in 3 years, the past 3 years. Deal count, the number of investments made, dropped to about 6,300 investments. That's the lowest in 7 years. Right? Some good news, I guess there have been 18 new unicorns in Q2, a little bit of an uptick from Q1. But generally speaking, obviously, things are still a little subdued and slow. So first question, just to kick things off, how do you feel about the market, and do you see kind of an upturn coming anytime soon?
I think what you find in historical downturns is, some of the weakness starts at the later stages with a subdued environment in acquisitions and IPOs feeding back to lower late stage valuations, say Series D, E, F, and in turn that has a feed backwards type of impact on early stage valuations. But early stage is impacted relatively less than kind of later stage funds. And I came across a stat this morning that was pretty interesting to me, which was last year there were over 20 mega funds raised in our space at $1 billion or more, and this year there's only one that's been raised. And I think it's been interesting to see how concentrated VC has gotten in the form of these mega funds, right? So 33% of dry powder right now in VC is controlled by 1.4% of funds. And so, I think given some of that structurally what's happened, at the early stage, which is primarily where we play, the most important thing is to have a differentiated approach and edge to the sector. And if you have a kind of right to invest based on very specialized expertise, you're impacted relatively less by some of the macro trends. Now, that being said, there's definitely an impact on the fundraising side of things for managers. And that in turn has an impact on their ability to continue to deploy aggressively into startups, right? So over the last 5 years, on average, in VC, you've seen, I think every year over 260 billion has been raised every single year. And as of first half of this year, it's only 77 billion. So the impact of that more challenging fundraising environment for managers has a feed-through impact on startups. So, my personal opinion is we're going to see even more shakeout over the next 12, 24 months, in part because a lot of the startups got funded to kind of 18 to 36 month runways. And as those cash runways kind of goes to zero, I think there's going to be a pretty significant impact on valuations.
Okay.
Yeah, so the way I see it, obviously, the VCs are now being very careful for multiple reasons. One is obviously the exit market, the M&A and IPO market has been closed in the last couple of years, which forces the VCs to recalculate what valuation makes sense. And because the exit market is bad, then you realize, wow, we have to invest at lower valuation. So VCs want to drive the valuation lower, whereas the startups, at least the good ones, raise a lot of money during 2020 and 2021, so they have enough cash. So they feel like, okay, we don't need to raise at this time because we have cash to survive and we don't want lower valuation, right? So that situation has been going on for the last 2 years, but I think things will start changing this year. Obviously, some of these now startups are running out of cash, so they do need to raise. At the same time, I mean, the VCs are sitting also on a lot of what's called dry powder, the capital that they can deploy because they also raised a lot of money. So now they're thinking, okay, so we'll just try to find some good deals and just try to invest a lot of money into these promising startups. So I think we are pretty much at the bottom of the cycle, at least the way I feel. I think things will start picking up starting end of this year and next year. So. Yeah.
Okay, great. So now that we've got kind of the bad news out of the way, why don't we focus it more on the upside or the future? So that being said, hopefully we've reached the bottom and things are going up, heading up. What sectors are you most interested in, and what types of companies do you think make sense to invest in during this type of market situation?
Yeah. So we're focused entirely on the gaming interactive entertainment segment, which is a tremendously exciting space. Gaming is now a $200 billion a year market, and it's become a cultural phenomenon where this is the way younger generations interact. It's where they spend their time. They would rather own digital pieces of clothing than physical pieces of clothing, right? And we really saw an acceleration during COVID as people realized how much of their identity is wrapped up in digital space. And I think this trend is heading only in one direction. Now, we have seen over the last kind of 3-4 years a bit of a hype cycle around this space at the same time. You hear the word metaverse a lot, and it's one of my least favorite words. If I ever see the word metaverse in a pitch, it's an instant red flag. And so, I think there's the kind of undeniable concrete market around gaming. And then there's the question of where does gaming go into having a much wider audience than just the traditional definition of a gamer. And so that's where I get excited as I look at what's happening with Netflix, interactive content more generally. I think there is a very big untapped audience of people who watch Netflix, Apple TV, this sort of thing, having more interactive experiences with content and being able to replay and shape things, in a non-linear way. So instead of, for example, a movie, which is a top-down piece of content that some creative somewhere is broadcasting to a bunch of people, I think what excites me about content is more two-way interactive content, right? Because that's the cornerstone definition of what a game is, right? It's a set of rules and a set of kind of mechanics that allow users to have a two-way interactive process. And so the potential for that to feed into kind of more communally evolving emergent forms of content distributed not just through PCs and Xbox and PlayStation, but just over the top streaming, I think that's very exciting to me.
Have you seen a lot of these high quality companies in the interactive space being born during this downturn?
I think we're starting to see some experimentation around the idea of, can we create like a real life Hunger Games? Do you remember in Hunger Games how the audience would be involved in helping specific players, right, with drops and other things? I think the potential for that type of experience where the community shapes it as we go. There's a studio in London whose pitch I heard recently, and it's one of the most exciting things because I used to be in Wall Street, and in 2007 2007, there were a lot of protests around, reform Wall Street and stuff. And so the setting for this particular experience was, a bunch of rebels who were protesting the structure of the financial system. But it's a non-linear branching narrative. In other words, the game designer, the creatives, they set the rules for the digital physics for this world to evolve. But then it's up to the players to shape how that world actually evolves. Like which of the several non-linear branching narratives is reality, right? And I think the potential for that, to feed into global phenomenon is very strong.
Okay, great. How about you, Dong? So what have you seen during this downturn in the strong market?
Right now, I think there are so many technologies that are super exciting. I mean, so one, obviously, everybody's talking about generative AI. Obviously, it's a very important area, but there's also a little bit of bubble. It reminds me of during the year 2000 with the internet boom, right? Obviously, right now, internet rules our lives, but at that time, so many companies were created and they were invested at such high valuation. There was just a crash. I think similar thing can happen with generative AI, but in the long run, obviously, it's going to transform the world, not just in the digital world and metaverse, but also in enterprise and in all aspects of our lives. So that's one. The other one, I think, especially is very relevant to LG, is transformation of energy. So now we are all moving away from fossil fuel, not just with EVs, but also at homes. It's going to be heat pumps and electric water heaters and you name it. I mean, it's just everything is going electric, which has a big impact, especially for LG because we make batteries, we make appliances, and energy storage systems at home and at the grid level, you name it. It's just everywhere. So it's just there are a lot of also management software related with new type of energy. It's just impossible to generate enough electricity for all the demand. So we just need to be a lot smarter in terms of managing the electricity. Also, a lot of this renewable energy, the generation is very. I mean, you cannot control generation. Obviously, solar panels will generate electricity only when the sun is out. Likewise, with a lot of other this kind of sustainable energy generation. So a lot of this kind of management storage of energy is going to be very important. So I think it's just a very, very exciting area for next 5-10 years.
Yeah. Okay, great. I think there are two sectors that both of you touched on, or maybe separately, but AI, generative AI, and maybe you didn't mention it, but Web3, it's kind of in this downturn time now as well. Generative AI, obviously OpenAI caused a huge rush of interest into the space. Do you see there to be continued opportunities for new startups in that space? Or do you think the game might be quickly closing due to the big tech companies like Google, Microsoft all rushing in there, as well as OpenAI, Anthropic, and these other well-funded startups? Would you like to go first?
Well, I think for generative AI, at least to the foundational model, is going to be pretty much ruled by those big, first movers, big companies, right? OpenAI, a lot of also hardware and all that will be done at the cloud. So Amazon and Microsoft, all those guys will continue to dominate. But there are a lot of all these applications that can be created on top of the platform. That there's a lot of opportunity for startups, especially because now a lot of this process can be automated. And also, I mean, it costs a lot of money to build a foundational model, but just to fine tune it with a custom set of data for that particular application doesn't cost as much money. So I think there's a tremendous opportunity for startups.
Okay, great.
On the Web3 side, I mean, our fund initially started in 2018 with this thesis that the intersection of markets and open economies and gaming in virtual worlds was going to be a very interesting space, right? Because we've seen over the last 20 years a lot of history behind item trading and marketplaces and games. And so, in this world where so much of your identity and your possessions are wrapped in digital status goods, then of course it makes sense for marketplaces in and around this theme to take off. Unfortunately, over the last few years, we've seen that kind of core idea get, I think, taken advantage of a bit by the kind of fundraising environment that token-based like ICOs and this sort of thing enable. And as a result, we've seen a lot of kind of poor quality startups and pitches, very opportunistic around this idea of the metaverse, as I mentioned earlier, and kind of NFTs, Web3. So I would say that our approach on the sector is I'm very bullish still on the idea of open economies in gaming, but it has to be done the right way. And the number one issue we've seen is a lot of tokens and NFTs have been sold before a product is released. Whereas I think a much more sustainable model, and one we're actually going to look to incubate internally, is one where you play with the idea of a floating virtual currency in a game, but have that currency not be sold prior to the game being released, but actually have a market price that is organically determined based on kind of the interest and the GMV flowing through the game. I think a lot of there's a lot of game types that are not suitable for open economies fundamentally. Axie Infinity is the hallmark of how this industry kind of really took off. But to me, Axie is one of the worst game types for blockchain games because it lacks organic payer demand for the currency. The whole thesis behind Axie was you could play to earn, but that's only one side of the supply and demand equation. And if you don't have any demand organically from people wanting to buy your token for use in the game, then your economy is obviously going to collapse. So the types of games that I look for kind of open economy type of gaming is one where there's a lot of social betting, I would say. Not gambling, but in games of skill and kind of casual competitive type of formats where there's a lot of reason to buy the currency to enter into these quick matches. So I think that's a potentially exciting space.
Okay, great. So
I think another trend to watch in that space is the merging of the digital world with the real world. I think you will see more and more. So far, until now, those two have been separated. But I think you'll see more and more of those two merging. And for example, let's say you want to visit Rome. You would go into a digital twin in the metaverse. And you roam around, you see what you like. If you like it, then you can use your digital currency to buy a plane ticket to actually go there based on your experience in the digital world. You will be a lot more informed traveler if you have visited digitally rather than just going there straight. So that's just one example, but I think you'll see more and more. So this digital currency will have more and more value, not just in the digital world, but also in real world too.
That's a really good point. I mean, I think it's worth unpacking that a bit. My own background, I used to be in foreign exchange and emerging markets at Goldman and JP Morgan, and I always thought the valuation of foreign exchange was a very interesting topic because unlike an equity, which you can value through traditional financial methods like discounted cash flows and other things, what is the fair value of a currency? You actually can't value it except with reference to relative metrics. Like, what is the value of the US dollar? Very hard to say except with reference to what the value of a euro is, right? And so it becomes this very kind of it's not that it's worth anything, it's just that it's relative consensus, right? And so if you apply that kind of core insight into gaming, what's interesting about virtual currencies properly constructed is the market cap of virtual currencies is potentially unbounded by any traditional measures of valuation. And it has the potential to capture all of the engagement and affinity value of how much consumers love this franchise in the form of a financial instrument that for the first time is tradable. And so I think that to me is the most interesting part of crypto. I don't think you necessarily need crypto to have an open economy, and that's something that, like I said, we're playing with internally as an incubation idea.
Okay, great. So crypto, blockchain, Web3, long-term, optimistic. Yeah. GAI, a lot of opportunities still. So I think many people are interested in those sectors, so it's good to hear that. Maybe in the last 10 minutes here, we can switch the questions a bit to which might be a little more relevant to some of the audience members. But in terms of Korean founders and Korean startups, becoming kind of global outcomes, making a really big impact on the world, becoming companies of consequence. What is your general sentiment on looking at investments into Korean startups in the recent past years?
So we do invest. Although we are based in Silicon Valley, we do invest in Korean companies. We've done, I think, invested in 8 companies in Korea, and I think the level of technology in Korean companies is very good. Usually, they have very, they have actually Korean people are more creative than the Korean people realize. They have a lot of good ideas, good business ideas that they want to try. I think being more in tune with what's happening in U.S. or outside Korea, that's where they need to work a little bit. They tend to be very Korea-centric and they understand Korean market, but they don't understand what it takes to develop a business outside Korea, and that's why I think where Korean companies can improve a little bit.
Do you have any advice on how they can improve that?
So I think a good model is the Israeli startup model, right? I mean, Israeli startups, they realize their market is very small. I mean, so they have to think about the U.S. market from day 0, even when they create it. So, and then afterwards, they do know that they need the right kind of help. So they are not hesitant to move their headquarters to the U.S., for example, and hire U.S. people and pay them U.S. salaries. Korean entrepreneurs tend to be very conservative in terms of that because they realize, wow, this, I guess VP of sales they're gonna hire in the U.S. is gonna make more money than the CEO, right? But that's just the way it is. You just gotta pay market rate and hire the best people. So I think that's
Okay.
Within the content space, I think we're very excited about what's happening in Korea and Japan because of the proven ability to develop great content and market that. I think Korea is even better than Japan at showing, recently outside of gaming, more in kind of traditional forms of media, how Korean culture can be a global export. And so I think in gaming, we are also going to see that. But there's a natural bias to be very inward-looking in both of these countries, and so I think it's just the obvious thing about thinking about a global audience and realizing that you need to have that kind of local perspective tailored for a more global audience.
Right. So as you look into Korean startup investments, what advice can you give to these founders if they want to raise money from overseas? I would assume in the hopes of your funds helping them expand into the overseas markets. Is there any advice you would give as they fundraise?
So I think 2 things. One is obviously you want to hire the right people. Also, you might need to hire outside Korea, right? To people who have experience doing business in the U.S. I mean, good example is one of our portfolio companies, Machina Rocks. It's a Korean startup, but they were targeting the U.S. market, so they're now working at Applied Ventures, Applied Materials. Also, took investment from Applied Ventures. They also hired a U.S. sales person who's very, very good. So they're just growing very fast in the U.S. So I think that's very important. And also just have a very open mind. Try to understand that the way that business is done is different between Korea and U.S. Also, I mean, in Europe, I'm sure it's a little bit also different from U.S. So I think it's just very important to just understand that and try to learn the local business culture.
My advice is going to be incredibly simple, which is on the language side. Just as I think about the Japanese and Korean studios that we've spent real time diligencing, it's actually the ones who have a very good English speaker on the team. And I don't just mean a literal translator, but I'll give you an example. I was one of our investments is in the Japanese internet portal DMM and what they're doing on the Web3 side. And one of the big reasons we invested was because they have an incredible translator who is not just translating, but actually understands Web3 gaming to the point where you can just have a very natural conversation as if there's no language barrier. And that kind of interpersonal connection is so important. when you're connecting with kind of global venture teams and trying to get the advice of global investors. So I think that's a very, very worthwhile investment.
Okay, great. Okay, and in the last few minutes here, maybe, for all the startups out there, we have over 40 startups who have joined us and more from the audience. Any words of wisdom or final key words of advice for how they should act in this current environment? We opened up with a little bit of the downside or the negative points of VC right now being slow. But what kind of advice would you give to an entrepreneur now in order to not only thrive, but be very successful in the future?
So I think there are a lot of companies with very good technology. I was quite impressed with the level of technology and all that. But I think what's important is now also think very hard on what market we're going to go after with that particular technology. There's always what's called the low-hanging fruit versus something that is really maybe a bigger market, but it's a lot more difficult to go after. So try to understand the market and why your technology has a very strong position in that the market, regardless of whether big or small. I think that's very important.
Okay. I think the kind of elevator pitch is very important. Like when you talk to global investors, you should imagine like everyone has a YouTube slider above their heads, and whenever you talk, they can fast forward you, because that's what they're trying to do in their mind. It's a terrible thing to say, but if you don't capture someone's attention in the first 10 seconds, they can't be bothered with all the details. So one thing I've noticed differently in Korean pitches versus American pitches is American pitches are much more sales driven, much more to the point, much more simple message where I get it. Whereas it's a much more linear, long, drawn out story. And so that's not a bad thing. That usually means there's substance behind what you're doing. But I think to practice the elevator pitch version of that is very, very important.
Yeah, and also for PowerPoint, if you have more than 2 or 3 points per slide, you're just trying to say too much.
Good. Okay, good. I think that's all the time we have today. Thank you so much, Dong-Soo and Richard, for joining us all the way from overseas. I hope the audience learned some insights, and both gentlemen will be here after the session. If you want to talk to them, please come up and feel free to chat. Thank you.
Shake your hand.